Hi, welcome to Smart Homeowners Series with Brenda, and
Liz.
we're glad to have you here. We are here to try to relieve some of the stress and anxiety you might have with purchasing a home, whether you're a first time home buyer or a second home, or maybe you just haven't been through the process in a while. And before we get into it, let Liz introduce herself.
Hi, I'm Liz Graham. I'm a local lender here in Winchester, Clark County, Shenandoah Valley area, really. I am with Guild Mortgage. Guild Mortgage is one of the older retail lenders in the country. We are in the top 10 of retail lenders in the country. And we have a lot of cool first time home buyer programs and even programs that essentially are for buyers who aren't quite ready yet. And I think that's kind of what we're talking about today.
Exactly. And I am Brenda Miller. I am a real estate agent here in the Shenandoah Valley with Berkshire Hathaway PenFed Realty. Try saying that 10 times. But I am here to help you find the perfect home. Between the two of us, we can make that happen, I think. So, we're going to get into the bones of this video series, and we're hoping that we will continue to do this for quite a while and answer questions that you might have. And if we hit on something today that you still have additional questions, we'll give you the information at the end of the video that you can reach out to either one of us. So let's get started.
Let's do it.
So, the why now question. If I'm not planning to buy for another 6 to 12 months, why is it actually better to talk to a loan officer today rather than waiting until I find a house?
Oh, that's a serious big time question, Brenda. And this is something that I feel like I fight with this like throughout my tenure as a loan officer, right? It's like I get people at the very last minute and they're just like, well, we found this property and we wanna purchase this property. And then all of a sudden you go through the loan application and I'm like, well, I wish you would have come to me 6 months ago because we could have worked on some of the issues that we're finding in this application. One of the biggest reasons you want to do it upfront. So getting your lending set up upfront is because when you look at an application and you say, oh, we're missing XYZ job history, we're missing XYZ in your credit history. Oh, I'm going to want you to rebuild a little bit more credit here to improve these scores there, and hence gives you better interest rates and easier loan process overall.
Nice. Now, what do they have to do? Like, what is the first thing that happens when they come to see you?
The first thing that happens is I like to have like a little intro call, right? Because I know me being a person, I am not going to be the lender for everybody. I am going to be a lender for a lot of people. You know, I'm bubbly, I'm outgoing, I'm also very direct. So I'm going to say, hey, listen, my name's Liz. I'm going to tell you a little bit about me, and then I want to learn a little bit about you as well. It's a little bit of a fact finding mission, right? So we start with who are you? Who am I? Let's look at your overall credit picture, and then let's go through the nitty gritty of it.
Well, let's piggyback on the credit because a lot of people say, "Oh, I don't have the credit score. There's no use for me to talk to a loan officer." Let's talk about that credit score.
So let's talk about the credit score. So I am not offended when a buyer comes to me and saying, "Oh, I have some bad credit history. I'm probably in the low 500s, maybe the high 400s. What can we do?" Right? And fact, the real fact of the matter is that there's a lot we can do, not in just 6 weeks or 6 months or even last minute 1 week type stuff, but we can totally rebuild a credit profile over a 6 month period.
Really?
Yes.
That's awesome.
One of the cool things, one of the cool things that I love about Guild Mortgage is that we have this program. It's called Pathway to Own. And what it is like it's Guild's own like home buyer course, right? Like there's a lot of there's a lot of agencies out there like your Virginia Housing, West Virginia Housing. They require you to have a HUD certified home buyer course.
Okay, what is HUD?
Housing, great.
I got her on the spot.
Urban development.
There we go.
Yeah.
People that haven't been through the process,
Right.
They might not know what HUD is. Sorry to put you on the spot.
No,
like
it's
that,
so totally okay. So it's essentially it's the government's way of watching what goes in and out of the real estate market and what government loans are going to back, right? So HUD has their own programs. Guild actually has a program that is licensed through HUD. And so in this program, we have 3 courses that you can do. After you complete these 3 courses, Guild actually gives you a $4,000 grant to purchase your home. So that can be used for your down payment, that can be used for closing costs,
wow.
or whatever.
Wow. You see how laid back we are? We're really fun to work with, by the way.
Yeah, that's true.
Now, we've all heard about that 20% down payment. Your $4,000 could go towards a down payment,
Sure.
right?
Mhm.
But talk about, do you have to have 20% to put down a down payment?
Absolutely not. That is actually one of the biggest falsehoods of mortgage lending in itself. Everyone's like, well, I don't have any money. Well, I'll tell you, you actually don't need to have money in the bank to buy a house, which sounds crazy, right? And it also doesn't sound super responsible. However, if you are able to pay your monthly rent, you could probably also pay a mortgage and still not carry a huge balance in your checking savings account. For example, so Virginia Housing, they have a 2% grant if you're using a conventional loan, or a 2.5% grant if you're using a government backed loan. And we'll get into all of that stuff later. But essentially, they give you free money, right? So free money if you qualify within the parameters, income limits, etc., to purchase a home. There's also zero down programs. A lot of people know about the VA loans. Those are zero down loans. That's a government backed loan for veterans. We also have USDA loans, which is super prevalent in this area, and I'm sure you've seen a few of that too.
Yeah.
So USDA is also zero down.
They're
so
awesome.
And then we also have first-time homebuyer programs that are only 3% down. And then we have FHA that's only 3.5% down. And then we can add grants on top of that. So there's just so many ways to skin a cat that, like, it's not cookie cutter, right? It's not one loan fits all. Like, there's like a million programs out there that will fit everybody's needs.
So it's truly worth it if you're thinking about purchasing a home or a second home to actually come and talk to you to see what could be available.
Exactly.
So if I'm coming into your office, what kind of things or documents would I need to have, or what would be useful for you to have to start the process?
Absolutely. So what I'm going to look at as a lender is, one, I want to see what you've made in the past 2 years. So I would say bring your W-2s, 2 years W-2s. And I also want to see your most recent pay stubs. So make sure you bring your most recent 1 month of pay stubs. It is also helpful if you bring the last pay stub of the previous year and then the year before that. And that way I can probably more accurately, look at your overtime income, your bonus income, or your commission income, because that gives us a little bit of boost to our base as well.
So what if, let's say, in the last 6 months I switched jobs?
That's okay. So we still want to look at a 2-year history overall. So let's say you switched a job to XYZ company and you're essentially making the same. You're still a W-2 employee. You're still getting overtime. You're still making bonuses like you did at your previous job. Well, I'm going to want to see your previous job's pay stubs as well, so I can still calculate all of that. And as long as there isn't a huge gap, and when I say huge gap, I mean like a 60-day gap. 60 days is kind of like the max that we want to see in a gap.
Oh, okay. Now, I know, especially for first time home buyers, the bottom line is always, what is my monthly payment going to be?
It's always going to be a monthly payment.
How is that determined in a short version?
Sure. Yeah. Cliff's notes. So it's going to be determined by one, what's your affordability, right? So when we look at your income, when we look at your debts, and when we say debts, we're going to pull your credit report. And on that credit report, we're going to look at revolving credit. We're going to look at installation credit. We're going to look at, possible derogatory credit. And if you have everything, fix it. But we're going to look at all that stuff, and then we're going to determine what you make versus what you already spend is going to leave us a little gap of what you can still afford. And that's going to be what's called your debt to income ratio.
Now, have you had a situation where, and probably putting you on the spot here, where a couple has come in, want to meet with you, they don't have great credit, they think that they're not going to qualify for anything? Do you have a story of someone that has been in that scenario?
Yes.
Can you share that?
Yeah, I would love to. So actually, I just had a friend of mine. I've met her a few years ago, and she's absolutely wonderful. She actually used to be a server at one of the restaurants I used to go to, and she's living with this wonderful man. And they've started their own little family, and they were wanting to buy their first house. So, and I was like, sure, absolutely, I will help you. So, but they had to do it quickly. They were in a really tough situation. They weren't able to rent, and because they didn't have a ton of money for a deposit and this and that. So that goes back to the other thing. They didn't have to have money. In fact, I think they got $500 back at closing, which is kind of cool. Yeah, wow. We can do that. Wow. So what we did is I ran their credit report, and come to find out their credit was actually quite terrible. And I'm sure this person will see this video and probably laugh about this, but we were down at we were a 546. And I was like, man, I'm like, this is bad. But then when I looked at, we had this thing called rapid rescore, right? But there was nothing truly bad on their credit report. They just had a couple high balances. So I was like, I said, hey, if you pay off these two debts down to $30, and it wasn't even that much they had to pay, it was something like $300. They were just really high on their credit limits. Their score went up to a 689. So not only we did that in 1 week. In 1 week, we went from a 546 to a 689, and they were under contract a week later. And then we closed 3 weeks later. Actually, we closed, well, yesterday.
Yeah, congratulations. Now, that brings us up a point. Some people think that they should, especially if they hear this conversation and they go, oh gosh, I'm going to go pull what I owe. I'm going to start paying off. That's not the thing to do. Even though it sounds like you should, you really need to talk to Liz first, and why.
So the credit companies, and this sounds crazy, right? So the credit companies have like their own little strange algorithm that I don't think any lender will ever understand, to be honest. Not just me, but I think any lender probably looks at it and goes, well, I don't know. You paid it down to zero. Now your credit score is actually lower. So they always say you want to keep your credit usage right under that 30% mark, right? So if I have, just to make it easy, if I have $1,000 limit, I want to make sure that my usage stays under $300 every time I pay that bill. So if I have if I have to spend $500, at least pay it down to that 30% range.
Okay. And let's talk about too with credit. There's something called a soft pull and a hard pull. And people are often worried that their credit's going to be affected.
This is So the difference between the soft pull and the hard pull. So yes, the soft pull, it usually only hits one of the credit bureaus, right? And then it only gives you a portion of that information. So there are some lenders out there who will try to qualify you on a soft pull, right? And the next thing you know, you're under contract because you're handing, and that's actually only called a pre-qual. There's a huge difference, and we'll go into that. I think that's later. That's a totally another conversation. So when they do that, they're only looking at a portion of information. Well, all of a sudden now that agent has that pre-qual in their hands, and then you actually go to do a full credit report because that's what's required to do the mortgage itself. And now you've done a hard pull, and now you're seeing all the things. When we start looking at all the things, that's when we run into problems. So yes, it can affect your credit. It can. So when you do a hard pull, depending on what your credit score is, how many times it's been hit by multiple credit companies, etc., not necessarily lenders, and I'll go into that in a second. So when we do the hard pull, it probably, if your score is excellent, if you're in the 800s, it might drop your score a point or two. If you're in like the mid 500s, dropping your score, it might drop your score probably 8 or 9 points, and that's common. Okay. And that's just because you're a little bit more credit risk. It's going to have a little bit more effect. But we want to make sure we have the full picture. And I want to be able to help people, and I want to be able to get them to where they want to be. And I always tell them, like, yes, it's going to be a hit. However, we're doing it so we have the bigger picture, and that way I can fix any problems that might come up down the road.
Now, if you're looking at multiple homes, or you're looking at different mortgage companies for comparison, that hard pull, isn't it valid for like 60 days or 30 days?
Yeah, it's actually 120 days.
Okay.
Yep, 120 days is what a credit pull is good for. So let's say I run your credit, and you're like, oh, well, Liz, so-and-so down the street has a better interest rate. Okay, fine. So you go and shop so-and-so. Those two credit pulls technically only count as one.
Okay.
So it's just like, okay, this is the analogy I love using with clients because I think it makes everyone's bought a car. Well, most people have bought a car.
Or two or three.
Or two or three. So everyone, not everyone. So when you go to the dealership and they say, we'll help you out with financing, right? And next thing you know, like 15 different companies have run your credit. It still technically only hits you as one. So if you're shopping within a 45-day period, and that doesn't mean, even for cars and mortgages, I don't think credit companies do not count in this. So Let's be clear. So cars or mortgages. So let's say you shop with me and you shop with Joshua down the road, or, Sally Mae down, West Street. Like, it's only going to count as one. And that way it's called shopping, just like you do for, a car payment.
So you don't have to worry.
You don't have to worry.
Great. Now, this might go into later series, but while we're on the topic, some people are, wanting to buy a home, but they also want to buy a car while they're having their credit checked, is that a no-no?
It's a no-no. It is a no-no. But I mean, things happen, right?
Right.
So, I mean, if we are, if you're purchasing a home but you all of a sudden your car blows up and you need to buy a new car, listen, you got to get to work. Right. So the best thing is to do in that situation is you just reach out to your loan officer and say, hey, listen, my life has happened. I need to buy a car.
Yeah.
What does my payment need to be to stay within my limits? Or am I already to a point where I'm kind of, I hate to say this, screwed? Right. Because you don't want to introduce, car payments right now with the current car interest rates, the auto loan interest rates are a little bit higher than what they have been. So you don't want to get yourself in a situation where now you don't qualify. But if you're buying something and $500 a month and you still have plenty of room in your ratios, great, buy the car, go to work.
The key to this is to call
Just
Liz.
call,
to get the answer. Don't be afraid to call, because you could affect your
approval at the very last minute, and that's
not knowing.
Yeah, and this has happened. And also, while we're on this, furniture.
Well, I own the Miller house, and I own a furniture store, but I know.
But you don't do in-house financing for zero money.
No, so you shouldn't buy furniture either.
So when we do that, so I know a lot of it says 0 payments for 6 months. Okay. Well, we're going to look at that balance, and then we have to use 5% of that balance against you. So that can also affect ratios. So if you're going to do that, I'd also like to tell people, can you wait?
Just wait till you get the house.
Just wait till you get the house, and then go nuts. Like, I don't care what you do after we close. But yeah,
just wait.
Yeah, just make the phone call. Say, hey, I need to buy furniture XYZ. I'm like, cool. Can you wait until we close, or are you going to pay cash for it? If you're going to pay cash for it, doesn't bother me at all.
Not a problem. Well, that ends today's series, and I think we've thrown a lot out at you. And again, that may have generated questions. And if it has, we are here to answer those. So, Liz, how can they reach you to get information?
Well, I operate strictly from my cell phone. So you can always call me. My number is 202-320-9666. I also, my email address is a great way to get a hold of me as well. That is lgraham, GRAHAM, @guildmortgage.net, not .com, .net.
Perfect. And if you're at the point of you're starting to look at homes, just want to get an idea of what's out there, you can reach out to me, brenda.miller@penfedrealty.com. I also do a lot on my phone, 540-323-1230. I do want to say that we broadcasted today from my office here in Winchester. I am local. We also have an office in Hamilton, so I can work Loudoun County as well. Mm-hmm. So that's not a problem. Also, we are planning on meeting in different venues.
Yeah, this is
for each of our series.
That's going to be the most fun part, right? So Brenda and I are local to Winchester, so we love all things that are local around here. And you guys know we have a ton of history, and we have like a lot of cool, fun little foodie places popping up too. And I know I like to eat.
Me too.
So we're gonna kind of take you on a tour.
Yes.
And talk about buying houses and mortgages and stuff.
So it's going to be fun.
Yeah.
And we're very low key, very easy to get along with. So please don't be intimidated by this whole process, because we're here to help you. Yep. So until next time, have a great day, and we look forward to seeing you.
Toodaloo.
Bye.